We have here going into our afternoon and then into the week. We're looking at a daily chart of the dollar. And what you'll notice here when you zoom out even further to the monthly charts is that we're in a massive double bottom and then pullback inside of these longer term monthly charts. Now, we have already made a pullback once this year as we were coming out of this double bottom, and we ran right to a 61.8% line and then lifted off. This was the beginning of February, and that was our previous high of the year. Well, we've since returned to a new all-time high, our previous highs of the year. And the question as we were going into the end of last week was, does the dollar support this rally? Is the dollar making new lows of the year? Because it should be. And it's not. It hasn't even broken through the halfway back long from lows of the year to highs of the year. And so we're keeping a very close eye here on that support level. Now, we cannot confirm, at least in DXY terms, that we have broken any of the intraday short setups from last week's highs to lows. But what was really interesting about the pre-market time frame for the euro is that the euro broke through its long setups from the lows of last week to our most recent highs. And it is inside of its very first measured move short after a trend break. So we will normally default to the euro if we've been forced to choose between the two in the past. It normally is the euro that is telling us what is correct, because DXY is just a bunch of currencies mashed together and they call it the dollar. That's not the dollar. That's the dollar maybe comparing them to the other fiat currencies, the other trash fiat currencies of the world, but it isn't the dollar, right? The euro is in its very first measured move short after a trend break. And that's why we're paying very close attention to this pullback on DXY to see if it defends. The reason that we're paying so close attention to if that pullback defends is because of the deep negative correlations that we have inside of the indices. These are almost records. 0.91, negative 0.91. We were in the high negative 0.8s. And over the 15-day, we're in the negative 0.97s, 0.96s. So the indices are incredibly sensitive to any dollar strength or weakness. And this is partly what has created this massive rally inside of the indices over this past 20 days. We're just looking and asking a question, is there a euro short and a dollar long below us? And if that's the case, if these levels bounce, then it would create a headwind for the indices. When we're looking at Bank completed a profit target and then hasn't pulled back into its new extension. And so we're essentially running back up into our previous highs from Friday, but we haven't made another new high. We're in a bit of a no man's land here right now in the financials. And then there's the VIX. The VIX defended a pullback from its old contract lows to highs as we were coming out of our Friday morning. This is what it looked like. We ran into a profit target on Sunday night, Monday. And the question that we were asking as we were going into the morning was, would there be a Friday's lows to highs? Or even better yet, would the VIX come into another full retracement from its old contract lows to highs? And both of those are potential support levels, and both of them potentially create weakness events for the indices. Well, as we came into our 9:30, 9:45 time frame, the VIX ran right to this line in the sand and stick saved it. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.